Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's November 16th. We're well past the halfway point in November. We've got less than 45 days till New Year's, folks. It's about 8:13 in the morning. It's Wednesday. It's hump day. We've got earnings to talk about today. We've got market action to talk about today. Before I get into it, please like our channel at Wealth Press YouTube channel. Go there and comment below these videos, subscribe to that channel, like these videos, and all that other good stuff so that we can get more subscribers looking at these videos. And I really appreciate it, and I'll answer every question. Now, let's get into the analysis. So as you can see here, the market is turning south. And what's interesting is the last couple of days, the markets have been opening, huffing, and puffing, and they haven't been going anywhere. And as I've mentioned to everybody who's been watching me for the last couple of weeks, I believe the Dow Jones is right now near a very, very crucial turning point on the way down, which would make a lot of sense since the spider S&P 500, I'm looking at the ETFs, but they represent the underlying asset within 99.9% accuracy. So it's like looking at the S&P index, even though we're looking at ETFs. You could see here, it looks like we're bouncing off the 200-day every time we come near here. And if the S&P goes down, and if the QQQ goes down, and the QQQ didn't even rise all that much during this rally, as you could see here, and I think we're going to turn south, which will put a lot of pressure on the Dow Jones. We've got some earnings that came out that I want to talk about. Target, third quarter profit drops 52%. The shoppers force discounts. Big problems. According to their numbers, let's see here, they posted net income of $712 million, $1.54. They were expecting 1.40 or compared to 1.49 million or $3 per share a year ago. So here's what the analysts were expecting. $2.16, they got $1.54. That's bad. That's really bad for retail. And think about something. People going retail, they're going traveling, all that stuff, it's all together. Target is a big representation of that. This is a representation of where people actually shop in America. Revenue rose 3.4%, which means people are still spending, but they're looking to save money right now. Comparable sales increased 2.7%, not a lot. Cosmetics, food, beverages, household essentials drove sales, offsetting weakness in discretionary items. But that's bad, very bad. That'll give some impact to consumer stocks today for sure. Now, we've got another report coming out today. It's coming out in about 14 minutes. We've got retail sales. Target, retail sales, hello, not expecting a crazy good number. I know the CPI and the PPI were good. I would be shocked if this number was good. Now, I'd like to see what it is ex vehicles and gas. They're looking at 2. I think the number is going to be on the lower end of the range. And retail sales with everything, I think we're going to be at, it's 0.4 to 2. I think we're going to be flat or maybe even negative. I don't think the number is going to be positive. I'm kind of bearish on retail sales right now. The other report is industrial production. I think industrial production is not as bad as retail sales, and I think we'll see some upside. Now, that report's coming out in exactly 59 minutes. It's coming out at 9:15, about 15 minutes before the market opens. It's 8:16 right now. So you've got a little less than an hour, and I think retail sales will set the tone, and I think Target is setting the tone for today because the market was positive, and now if we look at the futures, they are starting to turn negative. Another report that's coming out that we need to be mindful of is Cisco. Cisco's coming out with numbers, and yesterday Walmart and Home Depot came out. Home Depot not so well, Walmart really well, but now you have Target that's down 50% on earnings per share. Cisco's coming out. They're looking, I'm not sure if they're coming out after the market closes or before they open. I'm not positive, but they're looking at 84 cents per share and 13 billion in year-over-year revenue. I think the revenue number is going to be a little soft, and I think the earnings per share will be on target. Not seeing major issues there, but that's what's on the table today. Now, let me talk a little bit about global economy, talk about all the good stuff happening globally. The market got a little scared yesterday because NATO member Poland got some unwelcome rockets yesterday that killed some people. Poland is saying it was an accident, this, that, but I'm telling you, if Russia keeps flirting with this, they're going to get NATO's going to get really pissed off. The PPI is coming out. This is what I was talking about. Producers Price Index came out yesterday. U.S. futures are now pricing in 85% chance of a 50% basis point rate hike. If the Fed data starts coming out really, really nasty, that number will start declining. But I think this is pretty much baked in right now, about 85 to 14, unless we see something really shocking. Today, all eyes are on U.S. retail sales data. On average, they're looking at 1% compared to previous 0% growth. Industrial production's coming out today. This is the other report that I was talking about right here and right here. So those are the two reports that are on the table. Now, Shanghai, today closed lower as weak economic data from the country continue to trickle in fresh wave of COVID infections. That's probably the worst thing for China right now. And the Japanese stock market actually closed higher. Real estate, paper, pulp, and shipbuilder sectors were rallying, which are fairly non-consumer discretionary sectors, and that's a positive sign. Volatility looks like it bottomed out right here a few days ago. We got out of it around the 26, 25 and a half. It went all the way to 22. Probably could have made money on our option, but here we are. I think volatility is going to start rising. And if you look at the put to call ratio, it bottomed out. It looks like it bottomed out near the, here, let me just show you this. It looks like it bottomed out around 75, and it looks like it wants to go higher, which means markets are going to be taking it in the chin. If you look at each individual sector, which we will look at right now, you will see you got energy, industrial, financial, basic materials, healthcare, consumer staples. It's actually looking pretty good here. Basic materials are starting to come up with industrial. Financial, that's I'd be very careful with financials right now. Very, very careful. Healthcare looks good. Consumer staples looks good. I'm expecting technology, consumer discretionary, and communication services to continue coming down. And I'm expecting utilities to start coming up because it really belongs in this defensive space. Looking at it technically, energy looks like it's got more upside. Industrial looks like it's going to enter a choppy period. Financials made a new low yesterday, a new day low, so be careful with financials. Basic materials made a lower low yesterday, be careful with that. Consumer staples looks like they're still gearing up. Healthcare still looks like it's gearing up. Technology looked like it had a turnaround yesterday. Utilities looks like it's still doing pretty well. Real estate looks like it's doing okay, but we've got some big real estate reports later on this week. Communication services and consumer discretionary, I would not be a buyer right now. As I mentioned, things are not looking all that great. Now, today's Wednesday, and Wednesday I typically give you guys the top sector, top stock, weakest sector, weakest stock. Top sector right now remains energy. There's just no way to go about it. Real estate is the weakest one, but honestly, I would be happier if you guys stuck with the consumer stocks, because that's a 100%, not 100%, but it has a bigger chance of staying down because we're in an inflationary environment. So what I did today, I gave you 2 bullish stocks and 2 bearish stocks. For energies, I like the Marathon Oil Company. I think this company is great, and I like how it's consolidating near here. It's not running away, so it looks like it can gear up for another run up. And I like NOV. It's looking really, really good up here, and it looks like it can go for another run up here as well. They're both energy-related stocks. For the downside, oh boy, Expedia had a few upside, went up to the 103 level, barely in this rally. The Dow went above the 200-day moving average. This thing went from 80-something to 100. I think it's going to reverse just about everything and come back down to its low. And another one is Carnival. It already looks like today it's down 13%. And we're short Norwegian Cruise Line. Let's see how that's doing, if that's also cooperating, because it's down about 2%. But Carnival and Norwegian Cruise Lines, those stocks right now, folks, not even close. I mean, look at this thing. It's above the 200-day moving average. This thing looks like it's going to come down, and Carnival looks just as bad. Maybe not as bad, but it looks like it's also inflated, and it looks like it needs to start cooling off. So Carnival, definitely a short to the downside. Expedia, short to the downside. MRO to the long side. NOV to the long side. One thing I want to bring to your attention. Later this week, we've got housing data. We've got existing home sales, and we've got housing starts and permits. I'm not expecting these numbers to be very, very strong, and I'm expecting today's retail sales data to be weak. So don't be surprised if we have some selling pressure come into the market over the next few sessions. It may be a good opportunity to get in some long positions, but do expect a major, major pullback. Just to give you some idea of what I'm talking about, look at momentum levels right now. You still have real estate 16%, communication 28%, utilities 20%, but look at these. They're like 85, 90th percentile. But look at infotech right now. Look at it on a momentum scale. Let me show you this. You guys will love this. Look at how overbought we are right now on infotech. So this is not a market that's ready to go up. This is a market that's ready to revert back down. And also, just want to remind you that before you get too bullish, only 52% of the market is trading above. In the S&P, is trading above the 200-day moving average. In the Dow, 40% of stocks are trading above the 200-day moving average, and this thing looks like it's breaking out. 82, twice as many are trading above the 50. Look at the momentum levels on the Dow. You guys are going to love this. Look at where we're at. We're at the red line. We've been at this red line, we've been at this line maybe 15 times in the last 20 years, so it doesn't happen often. We are in an overbought market, and we need to cool off a little bit. Now, before I let you go, by the way, as I mentioned, I really appreciate when you guys post questions under the video in the Wealth Press YouTube channel, because other people get to read them, and then I get less emails to answer because people tend to ask the same questions. So please, please post your comments, questions under the YouTube channel, and I will answer them there. It's the Wealth Press. Go to YouTube and go to Wealth Press, and you'll see the video. I post them there at about 8:30 every morning. Now, just a heads up, I'm going live today at 1 p.m. Eastern Time to share five bear market entry signals that every trader should be watching. I'll give you 5 ticker symbols that are prime, that are working in this economy or have worked in this economy. Now, I'm doing this because I know high probability entry signals are becoming harder and harder to isolate, especially given the current market momentum, right? So I'm hoping you can join me in a few hours, and I'm going to show you a pattern that has an accuracy of 93% on this ticker symbol right here, SPY, right? Over the last 10 years, 93% accuracy. You do not want to miss out. Come hang out with me at 1 p.m. Eastern Time. I'll reveal my 5 ticker symbols, and you guys will love them. You can use them in a bull market, bear market, choppy market. It doesn't matter. They have no interest in the current trend whatsoever. Average holding time has been about 5 days. You need to check this out. Follow the link below. I'll see you at 1 p.m. Eastern Time today. Bye, guys. Have a great, great, great rest of the day, and be prepared for some downside trading action ahead. It just is what it is. We got to be real. Bye.